Well, good afternoon. Good afternoon and welcome to another Webinar Wednesday hosted by Cal State Bakersfield Small Business Development Center. I am your guest host today. I am your host, Kelly Bearden. More about that later. And today we got a couple of great guests today. And it's a lot of the financial side, some great financial resources, some wonderful tools, and we'll get into all of that in a moment. So what is up today? February 28th, 2024. Well, usually what's up is this is the last day of the month, but that's not true this month. We get that leap year. We get that leap day. And so tomorrow, the 29th, it's so great that every 4 years we get an extra day of life we get to enjoy. February 29th, an extra day that we can all aspire to be whatever we want. Now, there's some downsides too, and some upside. If you are an employee that is a salary employee, you get to work tomorrow for nothing. You know, many people I know take vacation or other holidays on that day, just not to be caught in that bowl. But if you're an employer and you have a lot of salary employees, hey, great day for you. So February 29th, Leap Day is up tomorrow. So that's great to have. Today, we're going to go over some fantastic financial resources. Some of those resources are going to be provided by our special guest today, Henry Magun, and he will be here in just a little while. Also, briefly bring in Dawn Golik, and she will talk about some financial resources as well. So it's a financial end of February today. We'll also have mention again of our ongoing reminders that the Employee Retention Credit has amnesty programs that are available. Talk a little bit about that. Also, the filing of the beneficial ownership, the BOI, as part of the Corporate Transparency Act for newer entities such as corporations, S-corps, LLCs. That needs to be done if you actually begin your corporation on January 1 or later. It has to be done by March 31st. More information on that. Our usual actual economic corner and capital quarter segments that we do will return next week. We got a lot to go over today. Not enough time for the economic corner and capital quarter, but we'll get into that next week. Also, we have some community calendar updates for the end of February. As always, we'll take your questions. So please, at the end of today's presentations, put your questions in the Q&A box. Also, our resources that we discussed today will be added to the chat, and so the resources will be there. Today, I will not have a poll because of the same issues of time. But that moves us to also one item that I didn't go over on what's up today, and that is PPP forgiveness is going away. We've mentioned it the last few weeks, but now let's bring in the local district director for the U.S. Small Business Administration Office, the Fresno district, serving proudly Central California, Dawn Golik. Dawn, come in and let us know what's going on with PPP and other things happening at the SBA.
Yeah, thank you so much, Kelly. Thank you to you and your amazing team at the SBDC for all of the work that you guys do to support small businesses in Kern County. I'm happy to be here today. I'm Dawn Golik. I'm the director of the Fresno SBA District Office, and we serve the 15 counties of California's San Joaquin Valley and Central Coast. So I appreciate the opportunity to talk a little bit today about some really important updates about the Paycheck Protection Program, or PPP. As many of you may recall, during the pandemic, SBA had two programs that provided small businesses, including sole proprietors, independent contractors, and self-employed business owners, with capital that was really critical to being able to continue their business operations. We had the Economic Injury Disaster Loan, or the EIDL, and we also had the Paycheck Protection Program, or PPP. And there were two separate tranches, or two separate rounds of PPP funding, which provided business owners with capital in the form of a potentially fully forgivable loan. And that loan was primarily meant to be used for payroll. That would include paying yourself if you were self-employed, sole proprietor, or independent contractor. but it could also be used for important business expenses, things like rent and utilities, mortgage interest. So if you spent at least 60% of your PPP loan on payroll, then you could use up to 40% on these other eligible expenses. Now, in some cases, business owners used 100% on payroll, and that was absolutely okay to do. You could absolutely do that. So here we are now, several years after these PPP loans were provided to business owners. And one of the requirements of getting a PPP loan is that you had to request forgiveness on your loan. Lenders who made PPP loans did so with their own funding. The loan was 100% guaranteed by the SBA. And at the end of the period of time, called a covered period, between 8 and 24 weeks that businesses use the loan, they did require borrowers to then submit for forgiveness on their PPP loan up to 10 months after the conclusion of that covered period. So for many borrowers, that would have meant in 2022, you would have had to submit forgiveness. However, we are now obviously in the end of February 2024, and there are still here in the San Joaquin Valley, the 15 counties that my office serves, as well as around the rest of the country, thousands and thousands of PPP borrowers who have still not submitted a request for forgiveness on their PPP loan. So what I want to talk about a little bit today is some information that is current, and then some breaking information that just happened yesterday regarding PPP forgiveness. So the first thing would be, if you are a PPP borrower that still needs to submit for forgiveness, you may actually be able to do that right now, today actually, because the SBA is extending a grace period for PPP borrowers that met two important criteria. Criteria number one is you have a loan of $150,000 or less. And criteria number two is that loan was made by a PPP borrower who has opted into the SBA PPP Direct Forgiveness platform. Currently, loans are kind of split one of two ways. Either you have a borrower that, a lender that has opted into the PPP Direct Forgiveness platform, or you have a lender who may not have done that. So currently, between now and March 3rd, the SBA has a PPP forgiveness platform that is open, that is taking PPP applications for forgiveness from borrowers, again, had a loan of $150,000 or less, and have a lender that have opted into our forgiveness platform. I will be posting some information in the chat here after I get done making my comments. So if you're not sure if your lender may be one that's opted in, you can check and find out. So on the forgiveness platform, in about 15 minutes, you can go on, if you meet those two criteria, you can submit your loan for forgiveness. It does require you to set up a user account on the platform. It will require you to have some information about your loan, and then you can request your forgiveness. Again, one of the things that we're finding that I think I do want to note that's very important is borrowers, I think, may not remember what those requirements were for using your PPP loan. So you can use the loan for non-payroll kinds of expenses, again, rent, utilities, mortgage interest, and there are some other things, but you cannot do that and request to have it forgiven until you've met the minimum of a 60% threshold that was used on payroll and associated payroll expenses. So we have talked to a lot of PPP borrowers the last couple of days, some of whom have said, oh, I used all of my PPP loan on rent, or I used 100% of my PPP loan to buy a new piece of equipment for my business. And again, those are not eligible PPP forgiveness expenses. So you can do non-payroll expenses, but you have to meet that 60% threshold before those are going to qualify for forgiveness. So I am going to post some information in the chat. But important to note that if you don't request forgiveness, I think this is really important information. What does that mean? What's going to happen? Well, again, as I mentioned a few minutes ago, the PPP loans were made by eligible SBA lenders. This was not SBA money that was loaned. This was money that the lenders loaned directly to businesses. So banks and other financial institutions that made PPP loans did use their own funding. Those loans were 100% guaranteed by the SBA. So if you as a borrower did not fully meet the requirements that you were obligated to do, which includes requesting forgiveness, the banks could in fact have the SBA pay them back. So what is happening right now is that for borrowers that again meet those two thresholds, 150,000 and less, and a PPP loan made by a certain group of lenders that have opted into the SBA forgiveness platform, borrowers have until March 3rd to submit their PPP forgiveness. That's a very small window. And if the loan is not submitted to SBA to request forgiveness by March 3rd, the SBA will be sending it to Treasury for collections. We do not wish to see any PPP borrowers here in the district go to Treasury for collections. There's a lot of very unpleasant things that can happen to you if you have a federally guaranteed loan that has been sent to the Department of Treasury for collections. So SBA is continuing to offer this grace period until March 3rd for borrowers to submit their loan to the SBA for forgiveness. It is not particularly complicated. It takes just a short period of time. I'm going to see if I can share some resources here. And it's pretty easy for you to be able to do that. So we do really want to encourage businesses to submit their PPP loan for forgiveness by March 3rd. Now, I want to also note that yesterday, the SBA did release a procedural notice. This is an important information bulletin from the SBA that for borrowers that have loans above $150,000 and with any lender, the SBA at some date that has not yet been determined, but at some point in the, we hope, immediate future, will further open that PPP forgiveness platform to any borrower, any PPP borrower that has any PPP loan of any size from any lender. So if you got a $2 million PPP loan from a big bank and you haven't submitted that yet for forgiveness, you will be able to do that shortly on the SBA forgiveness platform. No date yet on when that's going to be happening. And of course, as soon as it does, we will get that information out to all of our partners, including our SBDCs, so that they can share that with you. But currently right now, if you have a $150,000 or less PPP loan and you have a lender that's on the forgiveness platform, you can do this today. I did talk to, on Monday morning, I talked to a PPP borrower that submitted their application on Friday afternoon. And they found out on Monday morning that their loan had been fully forgiven. So that is great news. This is a really pretty quick turnaround right now. If you do submit your request for forgiveness, the SBA is handling those and forgiving those in pretty quick order. There is a lot of good information on the SBA webpage. I will post that into the chat so that you have that. You can also reach out to our office here in Fresno. We don't handle the forgiveness of the PPP loans, but we are able to direct you to information and resources and provide you guidance to help you make sure that you are able to get your loan submitted by that important March 3rd date. So again, you know, this opening of this platform to additional borrowers was just announced yesterday afternoon. So more to come on that as it becomes available. For right now, we're really focusing on the smaller loans, again, from that particular pool of lenders that has already opted into the forgiveness platform. So Kelly, I've said a lot. I think I will pause there. It looks like we have some questions. I can go into the chat and look at those. And if it's related to this, I can answer those. Or if you want to ask those at some point during the webinar, we can do that too.
Well, thanks, Dawn. No questions at this time that I see.
Okay.
But hey, there's time to ask a question still. I'm sure you're going to get some really interesting questions that come up, such as, one that popped up, because I've already come across one borrower that passed away before they got forgiveness. So I imagine there's going to be some really unique situations. Is there anything that can be done after that 3/3 date next week if you come across anything that's totally bizarre?
Yeah, SBA has not really provided further guidance other than to really, again, encourage borrowers that, again, are in that smaller loan with those particular lenders to try and get their stuff submitted by March 3rd. As more information is made available, we will get that out to you.
Great. Well, it's not a forgivable loan unless you complete the process. So hopefully we can get somebody who's not gone through the process yet and get that forgiven. Thank you so much, Dawn.
Thanks. And I'll stay on in case there's questions at the end.
Fantastic. Thank you. Okay, so moving right along. Getting on the right page here. So another thing that's really kind of pertinent right now is we're getting into, and that's the employee retention credit amnesty. And that was a program that came out where actually employers can return 80% of their money and escape much of the scrutiny from the IRS. And what is, if you recall, that was $26,000 per worker. And anyway, there's been a lot of different ways to where this thing can turn sideways. And to qualify for the 80% amnesty for the employee retention credit, you can't be under criminal investigation or have an employment tax audit going on. You need to notify the IRS by March 22nd. And employers don't have to pay or repay the IRS any interest. The IRS is allowing employers to deduct the full wages from their income tax returns. If you recall, we've talked about this probably over the last 3.5 years, is that if you take the employee retention credit, you have to reduce your gross wages by the amount of that credit. And if you take the credit 2 years afterwards, you have to go back and amend your entity returns as your LLC or your corporation, which means you're going to need to redo and amend your personal. There's going to be tax that's generally going to be due on that because you're reducing an expense and then you're increasing your taxable income. So it opened up a whole can of worms. We really strongly encouraged and hope that most, if not all of you, went through your tax professional and did it right. This kind of came around because there were a lot of people that were either misled or just ill-informed from third parties that actually benefited from actually the promotion of this particular program. So there's still time until March 22nd. The other thing that's still on our radar as far as compliance goes is the business ownership information filing. And this has kind of evolved a lot over the last maybe 6 months or so. And recently, around the first of the year, a little later, the filing is now due March 31st, 2025 for businesses in operation before 12/31. So if you were in business before the end of this year, you already were a legal LLC, you were an LLC, a corporation, an S corporation, other entities. We're even seeing where nonprofits kind of pop into this. So what you need to do is if you've already started your business as of January 1, you need to file by the end of this month. Very severe penalties for this. It's really going to be something that's going to be on everybody's radar as we continue to move along, but hopefully, at least, we got rid of the filing date of March 31st, 2024 for most ongoing businesses. Some of the resources, a 4-part webinar series. If you know somebody who's wanting to start a business, we have a Starting a Business Boot Camp, 4 sessions beginning on March 5th. And that will be in the chat, as well as the social media webinars, a 6-part online series that actually began in February, halfway through, but there's still plenty of good social media series left on March 5th, 12th, and 19th. There you see the topics for the upcoming 4th, 5th, and 6th sections. You want to run a daycare business? Well, there's plenty of demand here in Kern County, and we have oftentimes are having some really nice successes for people that want to start their own business by providing childcare for others. And the 12-week class starts soon. It's a business-related class that helps you get your licensing in the state of California and provides a startup grant. Classes are available in both English and Spanish. There is the contact information to learn more, and also the free human resource hotline for employers. Boy, how can you not beat all this free stuff that I give you week after week after week? I'm getting weak just offering you so much free stuff. But this is from the California Employers Association, and to provide at no cost, there's a list of counties throughout California. Almost all of those are in the Central California region. And if you are residing in any of those counties, that would be the number to call to contact the human resource hotline provided by the California Employers Association. Contact your SBDC, for example. At our SBDC, we have plenty of tools that can help you. We have a lot of seats available on Live Plan for business planning. Next week, we'll have back in here our resident Webinar Wednesday economist, Dr. Evans. Our YouTube channel is very popular. We have over 400 subscribers now. This webinar will end up there. Subscribe and have this webinar drop right into your inbox once it is uploaded a couple of days after this live event. Which brings us to today's special guest. And our special guest is Henry Magun, and he's the founder and CEO of Hansa. And it's a platform that helps business owners create some great financial resources. Enjoyed talking to Henry about this. Really, a lot of people will find that if you go look at your business online, it's maybe not as you think it is. And there's a lot of ways to fix that. We're going to be talking, Henry's going to talk about all of the services from Hansa. Before that, he was an investor at New Enterprise Associates, a global venture capitalist firm, where he spent years investing in small startup businesses. And actually, Henry holds a degree in mechanical engineering from Stanford University, the tree. Henry, it's great to have you. Thank you, and take it away.
It's great to be here, and thank you all for hosting me. I'm really excited to chat with the group. Great. So I will go ahead and get started. So as Kelly mentioned, I'm Henry Magun. I am the founder and CEO of Hansa. I founded Hansa to help small business owners get access to the financial services they need to thrive. I love giving these types of talks because I firmly believe that in order to navigate the system that surrounds small business lending and credit and banking and insurance, one must first really understand how it all works. And there's, of course, too much that goes into that for one session. So today I'm going to really narrow in on a very important component of that, which is small business information, also known as small business data, what it is, where it lives, where does it come from, and ultimately, how does it affect me as a small business owner? So starting out, I'll start with, as I mentioned, right, what is small business information? Now, most everyone here is aware of the visible presence that small businesses have online. Maybe it's a website, maybe it's a Google Maps listing or a Yelp review. But what you may not be aware of is that there is a lot of data online about small businesses that we as individuals can't see. We like to call it invisible small business information here at Hansa. And while it's not the type of thing that shows up in a Google search, it is out there, and it's being used to find out information about small businesses all the time. What it includes varies from business to business, but frequently it includes things like a business's registered address, or its owners, or the category that the business is in, what it sells, when it was founded, estimates for its revenue, things like that. The list goes on. There's a very long list of different types of information that you can find about any small business. Now, the question is, where does it live? If I can't find it on a simple Google search, where is it? And ultimately, it's stored by data companies online, and these data companies sell the data to large enterprises like banks or like credit card companies or like insurance companies. They use this data to find small businesses that they want to sell their products to. An example might be a credit card company that is looking to find businesses in a certain geography to market a new small business credit card to. And they might want to look at a certain type of business, or businesses with a certain amount of revenue, or businesses that are, between 5 and 7 years old. And so then they might go and they might, do their best to market that card to that specific group of businesses based on the information that they're purchasing. They're going to a company, they're saying, we would like to buy a list of all the businesses in these 10 zip codes that are between 5 and 7 years old. And then they will go and use that list to target. The problem is, if you are the small business owner and that information exists about you, but it's very hard for you to find it. Usually you have to pay to access it. It's very often simply unavailable to us as individuals. And if it is able to be found, it requires a lot of technical know-how to find it. And this creates a really big problem. But then we have to ask, okay, if it exists, if it's hard for me to find it and access it, where did it actually come from? And so, as I mentioned, right, these companies are selling this data typically without your input or consent as a business owner. And ultimately, they're getting this data about your business by accessing public records like a Secretary of State filings, or copying it from your website if you have a website for your business, or buying it from a credit card processing company if you use a credit card processor to process payments. And very frequently, they are just estimating, or they're making guesses about things about your business. So they might make a guess for your revenue, or they might make an estimated guess based on the number of employees you have, or if they know how old your business is, they might make a guess for how profitable you are. And ultimately, a lot of assumptions go into a lot of the data that they are taking and generating about you, and then actually selling to banks, to insurance companies, to credit card providers. And ultimately, that really impacts you, because these financial institutions use that information to find you as a business and to ultimately make decisions about you. And kind of that leads it into, should I care about this small business information? And ultimately, the truth is, even though we can't see it with a simple Google search, it's used to make decisions about our small businesses every single day. As I mentioned, right, these decisions frequently involve small business financial services like loans, like credit cards, like insurance. And what that means is that if this data, if this information about our businesses that's available online is being used to find us, if it's wrong, it might hurt our ability to get access to those financial products like loans, credit cards, and insurance that we as business owners need to thrive. And unfortunately, the bad news is that it's very, very frequently wrong. And the natural question is, okay, so how does it actually affect me, right? If it is being used to make decisions, why is it affecting my access? Mind you, it might even be before you actually go and apply for the product you want. So let's say that you want a small business loan. Lenders will typically make decisions on who they want to go and target and invite to apply for products based on this information that they're getting from these data companies that I've mentioned. And although the actual factors that go into a decision that a lender is making vary from lender to lender, out of date or incorrect data can impact whether or not they find your business for any lenders, if they're looking for your contact information or they're looking for how big you are. And ultimately, if they can't find you as a business owner with a high degree of confidence that you're a good candidate for their loans or their credit cards or their insurance, then they just default to marketing their products to everyone. And this actually hurts us as business owners the most, because it results in a lot of wasted time and money for us, because we end up applying for products that were marketed at us, but that we might not be a good fit for. And instead of the company marketing to us, instead of them taking the time to first figure out, hey, is Henry's business a good candidate? Should we market to him? Instead, they just send me everything, and they expect me to do the work to sift through the noise and figure out what types of these products would my business actually qualify for, and let me then, after I've done a ton of research and maybe even submitted 2, 3, 5, 10 applications, maybe at the end, then I've figured out, hey, this is what I should have done in the first place, but I spent a ton of time trying to figure out what was right for me. My guess is that many of you have received letters in the mail or phone calls or emails offering you different types of small business loans or credit cards or insurance or bank accounts or whatever it might be. And many of them are likely not a good fit for your businesses. But the problem is, because there's not enough accurate information about our businesses out there, because the information out there is mostly wrong, these institutions send us things, send us products, market to us, send us letters, make calls to us, send us emails for products that aren't a good fit for us. And not only does it waste our time, it actually ultimately increases the rates and the prices of those products for us, because unsurprisingly, these institutions, they need to compensate for the fact that they're spending a lot of money to find us because they have to market to everyone. And so we're offsetting the cost for them to find us by paying higher rates and prices for those products. And as I mentioned, you might have experienced this for yourself. Many other small business owners have. I threw in some, these are Google reviews of some companies online. And these are other business owners like you all expressing grievances on the fact that there is a data about their businesses online. It's available for purchase from these data companies. It's being used by the financial institutions, but it's wrong. And it's very hard for you to access it as a business owner. It's very, very hard for you to fix it if it's wrong, which it very frequently is. It's almost never free to do so. And ultimately, as I said, right, it being out there negatively impacts your access to the products you need. So I included some here, right? This company has my information, and on a website affiliated with them, information is entirely incorrect. This company gets your information from outside sources. This is what I was saying before. I use the example of scraping it for the web or pulling it from Secretary of State filings, or even making assumptions. And then it says they sell it to others who list on their website. This company operates an online directory and will not update the info unless somebody pays them to do it. Right. And these are just a few examples, of issues that other business owners like you all and like me have gone through. And so, we started Hansa to really solve this problem by putting power in the hands of business owners. And, we did so with the belief that, surely there's a more efficient way for these financial institutions to be able to find us without having to make uneducated guesses about whether or not they should take up our time as business owners trying to sell us financial services. But first, as I mentioned, right, we firmly believe that, to navigate it, you have to understand how it works. So I'm going to do a little bit of a deep dive really on how the system works. And like I said, any questions or anything that come up, please don't hesitate to throw them in the chat, and I'll do my best to answer them as we go. A very frequent question that we get, right? Business information that I've been referring to, right? The data that exists about our businesses online that's being used to find and market to us. Is this our business credit history? Are these the same thing? Are they different? And ultimately, the answer is yes and no. On the surface, it is very easy for us to draw a parallel between the idea of business credit and our personal credit that we have as consumers. But ultimately, the term kind of business credit and business credit history is really quite vague and variable when it comes to the small business space. On the consumer side, we have credit bureaus like Experian, Equifax, and TransUnion. Some of you may have heard of one or all of these providers, and some of you might even have credit scores with one or all of these providers. But even though on the consumer side we experience that, we have our social security number as our identifier, we have our birthday, we have our address, and all these things feed into our credit profile as a consumer borrower. On the small business side, we can draw these parallels, but then ultimately it breaks down after that. The reason for that is that small business credit is very complicated. It's very hard to view. It's very unstandardized. And ultimately, it's simply not optimized for the very small business owners that it should be benefiting. And the main reason for this is that the reporting ecosystem around small business data is unstandardized, inconsistent, and out of date. As I mentioned, in the consumer credit space, we have Experian, Equifax, and TransUnion. And these all have standardized scoring methodologies and are reported to by the vast majority of banks. If any of you might have a mortgage or a car loan or a credit card, you can know with almost 100% certainty that your borrowing activity, if you pay off your credit card on time, if you pay off your mortgage on time, you pay off your loan on time for your car, you're going to build credit based on that. The bank or the lender who you're working with is going to say, Henry has been making his payments on time every month. I'm going to send this information to the credit bureaus. So Henry is building up his personal credit history by being a good borrower. And as you can see on the left side of this diagram, Amanda, Amanda here is our consumer. You can see that she's a customer of credit card companies and banks and lenders, and they're all reporting to all three of the companies I mentioned, Experian, Equifax, and TransUnion, who are all managing and monitoring her data in a standardized way and making sure that it is up to date and accurate. However, in the small business world, very few of the companies that any of you might use for financing or banking or credit, very few of them are going to actually report to the business credit bureaus, which Experian and Equifax also have business. But then there's a third company called Dun & Bradstreet. Some of you may have interacted with them in the past. Some of you might have what's called a DUNS number for your businesses. Sometimes for grants or loans, you might be required to have a DUNS number as kind of a company identifier. But you can see on the right side, not all of the providers that Tom, who is our small business owner, is using are reporting to the three companies. None of them are reporting to all three. And that means that if Tom takes out a small business loan, he pays it off on time, he's an excellent borrower. There's a very high chance that he is actually not building any credit history for his good borrowing activity. And ultimately, that can hurt Tom down the line if then he wants to go and get a credit card or a new business loan. And then whoever's making a decision on whether or not to lend to him says, well, we have no data on your history as a borrower. And he says, well, I took out a small business loan 5 years ago. I paid it off on time. Well, that loan wasn't being reported. So Tom didn't actually build up any beneficial credit history from his activities. And zooming in, we can see that on top of the fact that there's little consistency to where the different financial services are reporting to the three business bureaus, there's also inconsistency in the actual information that they use to identify the businesses. So, I made some examples here. You can see the lender over here on the left is reporting, that's what the arrow is, to Dun & Bradstreet. And they are identifying a business by its EIN, which many of you might have EINs for your businesses, somewhat similar to your employer identification number, similar to a social security number. But the credit card company on the right is reporting Tom's credit line that he might have for his business credit card. And they're identifying his business by his business's name, not its EIN. And ultimately, because of that, for anyone who's then going and considering Tom's business for a new type of product, maybe a new loan or new credit card, they don't know that these entries, the one in Dun & Bradstreet and the one in Equifax, are actually both Tom's businesses. They might have 3 or 4 or 5 or 6 different entities that they think might be Tom's business. But because they can't figure it out, they don't know which types of product to reach out to Tom and to make offers to Tom for. To make matters even worse, mistakes are made all the time. And because reporting is not standardized and there's very little regulation around the business reporting space, unfortunately, these mistakes will impact the small business owners the most. The example I give here, I'm kind of sticking with Tom's business, and in this case, we say it's Tom's Diner. The bank on the left is reporting Tom's Diner his good borrowing activity with an apostrophe. And the credit card company on the right is reporting his good payment activity with his credit card without an apostrophe. And all of a sudden, these two different spellings further the problem that we have of, multiple entities. No one really knows which is truly Tom's Diner, which is not Tom's Diner, which should be combined together, which shouldn't. And that's all to say that, if somebody goes to look up information about a small business, which, going back to the start of my talk, that's what, financial institutions are doing in order to make decisions on whether or not you might be a good candidate for financing or for insurance or for credit card. When they go and they look up this information, they don't know which of these entries that we have access to that we're receiving from our search query, which of them are actually Tom's business. Are they all? Are none of them? And it makes it really hard for them to do any sort of customized targeting, customized pre-qualification of Tom's business, and ultimately hurts Tom because he then isn't told which products he actually might be qualified for or not, and ultimately requires his time to then make him then go and figure it out for the financial institutions that he's looking to get products from. And ultimately what ends up happening, when you combine all these issues together, we, as I said before, right, we ultimately can arrive at what very frequently happens, which is multiple conflicting records that are extremely difficult to track down or consolidate. And I kind of gave the example before, and I said that, in this example, I say that, a business has a doing business as name, a DBA name, and they also have a legal name. And that might create confusion if it's not, correctly registered. And so, this data might be coming into the data provider by, maybe they manually collect it. Maybe they go to the Secretary of State filing. Maybe they have a bank that Tom took a loan out from, and that bank is sending information to the data company, and the data company and the bureaus in this example are the one and the same. And maybe they scrape Tom's website, but they can't reconcile the differences and the conflicting information they're getting from these 4 different sources. So now there are 2 records that they create because their interpretation of all the data says these are 2 separate businesses, Tom's Diner and Tom's Diner, but they actually are both Tom's Diner. Now, you can imagine that, this might happen multiple times. And because these bureaus and the data companies have a tendency to actually buy and sell data about small businesses between one another, you get this kind of web of many, many entries. And we've seen, businesses who have more than 2, they'll have 3, 4, 5, 6 different entries for the same business within these data sets that, organizations and financial institutions are using to find potential new customers. But they have no ability to reconcile the data. And ultimately, it really limits their ability to do any sort of targeted marketing or targeted offers, and hurts us as business owners because, we end up paying the price both in terms of the time, because we're required to go figure out, what products are good for us, as well as money, because we end up paying higher rates than we otherwise should. Now digging in a little, why does it work this way? So in the consumer world, as I mentioned, there's a lot more regulation, and ultimately, in the consumer space, consumer rights are guaranteed by the government around credit. We as consumers have legal access. We have a legal right to access our personal credit reports at least once a year. We have to be told why we're rejected for a loan or a credit card or another type of product. And we have a legal right to dispute inaccurate information that we might find in our reports. And unfortunately, on the small business side, these protections don't exist. So you are not required, the data providers, the bureaus are not required by law to let you see your data for free that exists about your own business and that they are selling about your business. They are not required to give it to you for free. There's no requirement that you as a business owner be told why you were rejected for any type of product. So if you take out a loan and the bank rejects your business for a small business loan, they're actually not required to tell you why they rejected you, which makes it much harder for you then to go and apply for a different loan because you don't know what about your application needs to be fixed very frequently. And then, they are not required to give you a path to correct errors currently. That is something, a legacy component of the system that has been developed, but many of these providers don't give business owners any path to correcting information in their profiles, in their business information, their business credit profiles. And as I mentioned before and throughout the talk, there are a lot of mistakes and inaccuracies and redundant data and conflicting data that create a web of inaccuracy that's very difficult for business owners to kind of track down and then ultimately correct. And if a business decides, if one of the data providers, one of the bureaus decides, hey, even though we're not required, we're going to let business owners access their own information, their own report, usually they'll make you pay for it. And if you want to go and correct information, they're going to make you pay even more, even though they were the ones that gathered the incorrect information. And if you want to monitor it over time, you frequently have to pay even more. And so the system is not set up to optimize the experience for us as business owners, nor is it set up to help us succeed in getting access to the financial products that we all need. And ultimately, and I mentioned this before a little bit, but it creates this never-ending web of incorrect data because these data companies and these bureaus tend to buy and sell data amongst one another. So even if you find a mistake in one data provider, one of the bureaus, you pay money for them to correct that mistake. That same mistake might pop up the next week in a different data set because that had been purchased by another company and they put it in their data set. And this movement around makes it really, really difficult, nearly impossible for us as small business owners to track down every instance of mistakes and incorrect and out-of-date data about our businesses and fix them. And it's all to say that the system has been built in such a way that it's not optimized for us, but there are ways for us to mitigate what problems there are for our specific businesses and to help us get access to the products that we need. Does this data exist about my business? Is there really data out there? Yes. It is incorrect or out of date for the majority of small businesses, but it is very actively being sold and used to find out information about our businesses. And why should we care? I've kind of touched on this throughout the talk, but ultimately, as I said, right, this wrong data makes its way into applications for small business loans and credit cards, insurance, and even gets used before we apply for those products, and ultimately can cause for us wasted time applying for products that are unattainable. It can cause approval delays once we have applied. It increases the rates and prices that we pay because we're offsetting the difficulty that it took that institution to find us. It can cause increased personal credit score hits if there's too much negative or incorrect data about our businesses online. They might very frequently require a personal guarantee. And the reason I call that one out is while most small business loans here in the US and cards do require some personal guarantee, there are ways over time one can improve their business credit history and get to a point where they can take out a business loan or a line of credit that doesn't require a personal guarantee, doesn't affect their personal credit score. But in order to get to that point, one has to have built out a history of maintaining one's business credit history, which is ultimately built on their business information, as I've talked about. How can I view it? It's very hard, but it's possible, and I'll get to that in a moment. If it's wrong, can I fix it? Again, very hard, but it's possible. There are a number of tools to help you access your data, and frequently these tools are provided by the data companies that are actually holding the data, but nonetheless, they're typically paid tools. So what can I do right now? First one, sign up for Hansa. I'll of course mention that. So as I mentioned, right, we started Hansa with the mindset of helping small business owners get access to the financial products they need. And so what we offer is, the ability for you as a business owner to choose which information you want to share about your business. You have total control. Whatever you share, if you want us to help you share that with the financial institutions, with the lenders, we can do that for you. And that enables you to control and provide data that would, supersede the data that, they might be getting from a third party who never asked you permission to share your data, never verified the data with you, but they're selling it to that institution, that lender, that bank, whoever it might be. So Hansa is a platform where you can choose what you want to share. You can choose how often you update it. You can choose who it gets shared with. We also offer free grant coaching. The SBDCs are all great resources, and I encourage you to use them for those types of resources. We at Hansa also do some totally free grant coaching and have partnerships with a number of companies who help aggregate different grant offerings across the country, so that you can very easily and instantly kind of put in some information about your business and see just grants that you might qualify for. We also partner with a number of lenders. We are not a lender. We are not a bank. We are not a financial institution. We're a platform to help business owners control what data about their business those types of institutions can access. And so we do partner with some of them. And if you choose, you can have information that you would like shared with them directly shared. So you don't have to go through these third-party data companies. We can pass it directly to them for you if you want to get instant approval on a loan, or a pre-qualification with a number of different offers, things like that, and much more. But outside of Hansa, other things that you can do today to help your business improve your business information and improve your access to the financial resources you need in the future. A business website. So this is one that frequently people will overlook or not know about. If you go and apply for a loan, very frequently that loan officer will look up to see, do you have a website? If you do have a website, how legitimate does the website look? Does it have your accurate contact information? Does it have your business's accurate address? These are things that actually do impact your, how fundable your business is in the eyes of a lender or a credit card issuer or companies like that. If your business is not registered, I assume that most of yours likely are, but if not, register your business as a business entity, like an LLC or a corporation. Make sure that your information with those filings is up to date. Also very important. Get an EIN if you don't have one. These are all kind of standard when you're setting up a business. Check your business information with Experian, Equifax, Dun & Bradstreet, and DataXel. These are 4 of the biggest ones. I mentioned the first 3. Those were the bureaus that I mentioned before. But go to these websites, search for your business. Experian has a search, and Dun & Bradstreet have a search that you can sign up for and access. As I said before, right, most of the products that you might want to use within these companies are paid, but you can go and look up your business just to see if you exist in their system. And then from there, you can make a decision of whether or not it's you feel it makes sense for your business to pay for their further services. Open a business bank account. This is very helpful when a potential service provider is making a decision on how trustworthy they view your business to be. Dedicated business bank account helps a lot. And then get a business credit card, and specifically pick one that reports to the business credit bureaus. If your goal is to build up a business credit history and eventually hit that point where you are able to get financing without having to use a personal guarantee, it takes time to get there. But the first place to start is get a credit card that reports to Dun & Bradstreet, Experian, and Equifax, so you can start building a credit history about your business, not just about you as a consumer. Oh, sorry, just about done. There we go. As I said, Hansa is a free app to help you get access to the financial services you need. We help you use data to control the narrative and show financial service providers the most accurate and up-to-date information about your business. And yeah, that's my stuff for today. I put my email here. I encourage any or all of you to email anytime if you have questions or want to learn more. This QR code takes you to our website where you can learn more. We have great resources, a great blog with articles about this information, and we love when folks reach out, and if we can answer any further questions about business credit history, business information, and what you can do to help your business get access to the financial services that you need.
Fantastic. Great stuff, Henry. There's one question that I am asked frequently,
Yes.
and I think after this presentation is the perfect time to ask it. And that would be, accessing credit, accessing capital for your business. Obviously, you've gone through the steps and why it's different from accessing it as an individual. Can
Yes.
you just highlight some of the key points or some of the key issues that might come up from somebody who's accessing as an individual, even through an entity like an LLC on, like, say, an SBA loan, and compared to some of the resources that are available to access when you are a business using business credit?
Yes, absolutely. One of the first things that people face when they're accessing credit through if you open a credit card that you're using for your business expenses but is in your name and is underwritten based on your personal credit. One of the biggest problems is utilization of your credit line. My business, I assume your businesses, most businesses, the amount that they're spending on a business credit card each month, or a credit card that is used for the business, is significantly higher than any personal spending they might do for their day-to-day life. And ultimately, what that can result in is that if you as an individual might have a limit on your credit card of $2,000, and you're running your business and you're spending $1,900 a month on that card, your utilization, which is the percent of your total credit line that you're using each month, is very, very high. And that actually hurts your credit score. So if you're running your business and you're maxing out your personal credit card every month just to run your business, it can negatively hurt your personal credit score, which then kind of worsens the cycle, which will make it harder for you to increase your credit limit and improve it over time if you're going to keep running your business on it. So that's one of the biggest things, and probably the biggest hurdle. The second being that as consumers, we simply have lower thresholds that banks will give us for credit lines. If I want to go and get a credit card for myself, as I'll use the example I used before, right? If somebody gets a let's say a $2,000 credit line for their personal credit card, a business might get a 10, a 20, depending on the size of the business, could be a $50,000 credit line, right? So the size of the credit line you can get, that is if it's underwritten on your business's cash flow and history, and number of employees and accounts receivable, things like that, you can get much, much higher credit lines while simultaneously building credit history for your business. And you can also end up actually saving time and money over time, because you can get better rates, get better benefits. Business credit cards typically have significantly better benefits than consumer credit cards do. So that's kind of an ancillary gain that you get when you're holding a business credit card.
Well, fantastic. Great stuff. Hey, we're out of time. Thank you, Henry. Thank you for joining us. Dawn, great to see you, and thank you for joining us. I see no questions in the question box. Real quick, we'll just glance through the chat box and give you one last second to get a question in there. But the chat box, other than greetings and salutations, we had a resource there for the employee retention credit. And Dawn has the SBA forgiveness platform that's in there, information on the Corporate Transparency Act. And to reach the Fresno district of the SBA, call 559-487-5791. Information on the other events coming up, the portal for the 150,000 and less, a little bit more on the training programs, Google reviews. Hey, you can go there. Henry's contacts information is there. And if you'd like more information on Hansa, go to talk to Henry, and Dawn's available as always at the Fresno District Office of the U.S. Small Business Administration. So thank you both for joining us this week. Any final comments?
No, I just appreciate you having me. It's a lot of fun, and really, really grateful for the time.
Yeah, Kelly, thank you for everything you and the SBDC do. And again, the SBA District Office here in Fresno, we do serve all of Kern County. If there's anything we can do to help small businesses, they have questions or need assistance, we're here to serve them.
Outstanding. Well, great. That wraps up number 310. We'll be back next week. Guess what it'll be? It'll be number 311. How ironic is that? and it will not be on the last day of March. So for Dawn Golik and Henry Magun, I'm Kelly Bearden. We'll see you next week. Everybody have a great week. Bye-bye.